Yeah.
glitch.
Probably.
The
We'll
glitch
see.
in the
We'll
Force.
make sure.
Yeah, it's good.
Were you in New York this weekend? Did
I
see
was. I just got
something
back
on
last
Twitter
night.
about you being in New York?
I just got back last night. We can talk about it. I went to Restoration Hardware, Gary Friedman's place. We went to one of the Resto restaurants. It was my first visit
Did you?
to the fancy
How was
places.
it?
Yeah, it was quite.
Was it the meatpacking district one?
Yep. It was delightful, actually. It was a terrific meal. I don't know what that's worth. It's an entirely different business than furniture. These six levels of furniture store that's underneath that was empty.
Yeah, exactly.
So it made it look gorgeous. It really had the nice effect of kind of made it look like just going to a very fancy house for a very exquisite dinner.
Yeah.
A really expensive business model. Really, just is if you're not selling any of the furniture down below, man. And it's all just,
You better sell a lot of food.
I think it was Mr. Spurlock who was called them grayish, just said there's that kind of tan beige restoration thing. I mean, they've got 7 stories of just that in there. And so it's, if you don't like that particular looking sofa, man, they've got one in every type of cover. You're not going to be happy there, though. What you're not going to find is different patterns. So they're kind of all in on one look, and it's all expensive. And it's
I live near their headquarters here up in Bay Area, and we have a nice one at the mall. And the food's good. It's really good. But the stores are always empty. Walking up
just
to the restaurant,
dead empty, just dead flat empty. Now you walk in and someone greets you there. They just have this poor woman sitting there, and her entire job is to say, "No, sir, the restaurant's upstairs." To literally everyone who walks in, just very politely, I'd be delighted to sell you furniture, but like 99.9% of the people.
Exactly. They didn't come there to shop for furniture. They came there to eat.
No one did, yeah, and to keep the homeless from sleeping on the couches.
There's that. All right. Let me retweet this. And we can get this show on the road. I got a hard stop. I'm home alone this week, so I got to get kids off to school. All right, let's go. Welcome to Wall Street Beats, everybody. I'm Steve Lamar. I'm joined by Kevin Bakes Baker, our charts and technical pro, and Jeff Macke, our retail pro. And I think we're going to talk some. We're going to talk some Williams-Sonoma this morning. We got some saber rattling again after yesterday's big fight. I can't keep track. We had some great news
I went out of town.
No more wars.
Out of who?
Trump didn't win the Nobel Prize. What else? Let's just get this started, Jeff. What are you thinking about?
I'm thinking consumer, man. I just got back from New York.
Right, forget all that other stuff.
Built by the Dutch to be the center of trade, and man, the English can take it over. They can have a socialist be mayor. It doesn't matter. That's just where people do business and commerce, and that's what it's about. And go to hell if that's what you don't believe in. So it's a great place to just kind of be feet on the street. You can make too much out of these single store visits, but when you're going to New York and you go out shopping there, you watch the consumer there. That's what the stores want to look like. You go to it's a Nike store there. That's such a traffic store that whatever Nike's trying to do, that's where you're going to see it in work. That's where you're going to see it in practice. Maybe you don't get that experience from Bloomington, Minnesota, or one-off Austin retail, just kind of shopping mall. But you do in Manhattan, and that's what it's there for. The consumer still seems great, Steve. It's not any of our first rodeo, and you can really tell. New York's a place where, being that consumer city, when the economy's not great, you can see it bleed right away. You can see a lot of empty storefronts. You see a lot of just the vibe is very negative right now. People are shopping however they say they feel to the University of Michigan and their silly poll and everything else.
They're
You're
just
still
not
going
buying
to have a
Ferraris.
great Christmas. Which kept me long, and this brings us to Williams-Sonoma, a perfectly good company, operating better than expected. I love taking the other side of that bet that the consumer's dying, but the problem is they've got a real margin problem. So I'm on the plane on Thursday, and all of a sudden there's going to be more trade war stuff. I mean, it literally was just kind of, it was like a Twilight Zone where the plane went through an orbital window, and all of a sudden it was April and it was Liberation Day all over again.
And the floor fell
130%. Yeah, and it's like, I'm on a plane. The airports are packed. Every seat on this plane is sold, no matter what plane you get on. It's people are traveling. People don't go comfort traveling when they feel economically insecure. The country is cooking along quite nicely.
Yeah.
The stocks are getting murdered because it's really hard to run a company like Williams-Sonoma. Lori Edwards, one of the best CEOs, my absolute favorite, but not even she really knows what they're going to earn next quarter. And you can tell it's driving her crazy, and it's a real problem for the stocks. I've been long Williams-Sonoma. It was a delightful buy in kind of the 160, 150 area. You could see it really getting smacked down there. But the problem is that you stocks really need the technicals, the fundamentals, and a narrative. And the narrative here is a real problem. And then because the financials are a real problem, you can, I'll take the bet on the revenue side because the consumers are going to be stronger than people think. I have no godly idea what they're going to earn, because their cost of goods sold just kind of fluctuates on a whim, depending on what the leader of the free world decides to tweet out while going to the bathroom or whatever it is that's happening there. So, it's pottery.
Kind of hard to run your business.
It's really, it's just hard to know what you're going to earn. And from an investing side, it actually is an argument to go private. It's certainly not an argument against less disclosure, but the point is, like, you need at least quarterly updates on what the hell's going on, because you can't really build a financial model. Analysts like models. I do this for a living. I don't have to write those silly analyst reports, which are largely kind of silly, but you need a model. Like, tell me what it's going to earn next year so I can see whether or not what I'm paying for it today makes any sense at all. And they don't know. And a shrug and an angry screed like this isn't really a bold thesis. So it's not really a trading call I don't think the stock's broken. It just got hammered on Friday, rightfully so. And then we kind of took it away. And so it made a nice bounce up to about 190. And, it's a graceful exit. And I think that's the way I feel about a lot of these stocks. They're just, unless you are absolutely cooking with gas. And we have heard from retailers who are just crushing it. But it without that certitude into the out quarters, you don't have a multiple expansion story, or you do,
and the
it's
expectations
just built in because of the stock doesn't move.
Yeah, you got an expectations game here too, right? Because the expectations have been pretty high, I think, on a lot of these names, especially the best run ones like Williams-Sonoma is. And it's sell the news, just like the banks.
It's a little Levi's turned in a terrific quarter, legendary quarter for them. My God.
Yep.
It's just that kind of the denim, we debated it about a lot here. And as predicted, boy, it was terrific looking numbers. They can't promise the future. And so we're in that kind of environment where when they're not, the companies, now once they report great numbers, they can't say a thing. And that means the narrative changes immediately to, boy, I bet these tariffs are killing them. Boy, I bet these shipping costs are horrible. I wonder what's hot. And if they can chase goods, our companies are going to be able to get more stuff in over the holiday period, because it's too late to do your basic buying. They already shipped their product in. That's why Christmas started, already is in pretty much close to full swing. They're going to be setting up Santa's Wonderland even as they take down Halloween this year. But
we're skipping Thanksgiving.
Forget about it. But where they're going to make the real money is by stocking up even more on the stuff that's hot. And that's going to be hard to do this year with tariffs and constant flux. And beyond being hard to do, you just don't know kind of what margins you're going to be able to bring that at.
Right.
With Williams-Sonoma, all this uncertainty really weighs against people just going out and buying just a ton of new couches. You and I were talking about the restoration hardware business. It's easy to make fun of Gary, the CEO there, just because he's a little bit of a lunatic. For everything else, I think even he would admit that. But they've changed their business model entirely to restaurants. Like, that's how bad the furniture business is right now. And you can say that he's it's just weeping a little theatrically over it, but at the same time, you can't deny the basic truth of what he's saying, which is this is not the kind of environment where people just want to lay out a ton of cash and redo their house when they just redid it during COVID. So
Gary just wanted a good restaurant. Gary just wanted a good restaurant to go into every city he was traveling at the time.
Right, and a place in Paris, and a housing development in Aspen,
exactly, and a yacht, and
a rental experience, and a yacht. Godspeed to Gary. Who would begrudge him such a thing? Congratulations on winning capitalism, but I don't have to belong your stock, and that's a really, really hard company. They're in a tough position here.
Bakes, look at,
and that's just
what do these charts say? What's the chart on Williams-Sonoma and Resto? What are you thinking?
I think that it matches
Matches pretty
Jeff's.
much what Jeff's been saying.
Well, I think this is very well respected CEO, great company, and this looks okay. But you need to have them say, we're going to get off China's neck, and our margins aren't going to get obliterated. Jeff, I don't know if they have lowered guidance or withdrawn guidance. What is that going on there?
No, they're doing really well versus expectations. You got a lot of the theme this year in retail, and it's always this way a little bit, just because it's the nature of the beast. You go win the game, and then you talk how bad you're going to get killed next week. So we've had some really big beats with kind of guidance has been sort of they always want to be conservative like every other company. Laura's really good, so they're going to lowball it a little bit. They're going to say
Yeah.
we're not really sure, and precisely because of what happened on Thursday, we're not really sure. We placed our orders. We expect them to come in November. We might have to stiff them a little bit. We're going to have to do some renegotiating. But, when you change the math to 130%, hell, you're better off just making it a ghost ship of furniture. There's a bunch of cabinets out there bobbing in the Pacific Ocean as they wait for a home, because when you take them in, you actually have to pay for it. That sucks. That's really expensive. And if my COGS is going up by, double, makes it super hard. So, they're doing great things, but it's not necessarily wrong to trade them. Now, that's just a portion of what Williams-Sonoma is doing. Of course, they've got domestic products. Of course, like half their revenues are going to be, probably from furniture. And of that, a fraction of it comes from China specifically. But there's no, all it does on Thursday is it just illustrates how hard it is to say, because, who knows how sweeping these tariffs are going to be. There's an element of China running throughout them, whoever the manufacturers are, and there's only so much give. They've already admitted they had to raise prices a little bit, and that makes sense. That's what they have to do, but that doesn't get them any closer to just being an EPS growth story that's going to be able to drive it higher. And Bakes, also what I see in that chart, we've talked about this a lot. It's really hard to pay more than you would last January for these companies. Last January, the tariffs were just kind of a promise of, this is something I'm going to do. Well, he says a lot of stuff. But at the end of January, the White House said, we're serious. Like we're actually going to do this. And that's when a lot of these retailers popped. And it's super hard to pay more, even when you have a beating earnings type of scenario like you do here. So the multiple just works its way lower. Again, from a value perspective, I'm supposed to say, oh, that's terrific, because who wants to pay more? I get to pay less for a stock. From a guy who likes his portfolio to move moving upward to the right and that kind of direction, so I can make money and eat and go live and do things like that, that's bad, because it's not great for the stock, and I can just do better, waiting elsewhere. But that's
so Jeff, are you
I
just
think they've beaten.
Are you just holding on to these names? Are you buying this dip?
I'm
dip
lighting the
Thursday,
load on
Friday,
Williams-Sonoma. Yeah, I was really hoping for more carnage yesterday. I really was, and I think that this is a good market to crawl around in. We've come a long way from where we were in April, but it's brittle. And again, we kind of, a lot of these stocks, just like Williams-Sonoma, just like tons of them have kind of failed at the old highs. Just with the very simple idea, it's technicals, whatever you will about them. This one, they're best when kind of the chart makes sense to human kind of instinct. And you have a lot of people that just got back to even on this tariff fiasco after going through a ton of pain in April. And it's like, the prayer of the bad trade is in effect. Please, God, get me back to even. I'll sell and never do this again. You got that happening in some of these retailers, and it's just, Levi's investors. That stock is dead money for the last 6 years for its entire existence since an IPO.
And then all of a sudden,
they report great news. That stock goes lower. It's really hard to punch to new highs when you have this constant margin pressure.
All right, Bakes. Show us that resto chart real quick.
I'd like Williams-Sonoma to stay above this 181 level, that Friday low and the 200-day moving average, and the fact that it
right there, right?
Yeah, 181 is the number. Below that, I go, something worse is happening down the road, and but right now,
we're kind of convincing this is not a trading call. It's a lousy short because it's a really good company. It's not a great long because it's a crazy world and the narrative sucks.
It's in the DMZ.
Yep, there you go.
Okay.
RH. Did you pull up the RH chart? I want to see what that one looks like these days. It's been a while since I looked at that stock.
It's Niedermeyer dead. I mean, it's
Oh my god.
it's just there's
Yeah,
there's nothing going on. There's nothing going on.
Was that stock trading at 600? Did that ever hit 600?
I think if you go back far enough, I think you can get up to 7.
Yeah, here it is. COVID.
730.
Yeah.
Where'd that go?
Wow.
Yeah. COVID's at 733 is the high.
Yeah, 733. Wow, it's close.
That's a haircut.
Yeah, it's so that's where resistance is in the long term.
Yeah,
we got plenty of room up to there.
So where's resistance on the
honestly,
downside?
it's a credit to Gary that it's doing this well. There's a ton of faith built into this stock because the numbers are terrible. There's actual genuine liquidity, operational risk at play here. He's got developments going on in the Champs-Élysées and Aspen and other very, very expensive sounding places. And he's becoming an experienced company that also does a little furniture. Hats off to Gary for the things hanging together as well as it has, but it's you need to kind of give him a lot of credit and just the whole globe a lot of faith and more trust than I'm willing to extend in a stock. That's for sure. In that chart,
we'll give Gary credit for keeping this thing on the rails. Not sure how much longer he can do it without the high end wanting more expensive furniture. All right, Biggs, let's transition over to what did you want to talk about? You wanted to talk about some silver and some uranium.
Yep. I went through my 5,031 charts over the last couple of nights, and that's up. It increased 23 in a week. So we're adding about 100 a month, 20 a week, and the ETFs are just exploding of every kind of stripe you can possibly imagine. I had one of the best days I can recall myself yesterday. I was up just under 5%. The S&P was up. The SPY was up 1.53, and but sometimes I'm lucky, sometimes I'm good, and the charts have just led me to places that now the headlines are feeding it. Here's the buy of REMX. This is the Van Eck Rare Earth ETF. REMX is the symbol, and I'm up 16% on this so far. Had a great day yesterday. It has the usual suspects: MP, Lithium America, Albemarle, which really Albemarle was one of that's coming out of a pretty protracted base. It isn't as much of a high flyer as the rest, more lithium focused. We need rare earths. There's 17 of them. I can't pronounce half of them, and China is saying that the metals aren't really that rare. It's the refining is very, very difficult, and they're rare because you don't have huge economically viable deposits. There's a lot of it in the Earth's crust, but getting them out are pretty tough. This goes into EVs and smartphones and all those things, and the magnets for EVs and what have you. And we need them. We need to refine them. The government is very interested in making sure that we have a secure supply here, particularly on the refining side. But it's going to take a long time.
Yeah.
So, I like commodities because I think the trends kind of get in place and stay in place for a long time. Building a new mine of anything is an absolute bear, and these stocks are just going to continue to work higher, in my opinion. And I understand that I've got some extended charts here. I'm very much aware, but that's the reason I go through 5,000 charts, all the ETFs, and I'm looking for my 10th now. I own the 9 best. I'm looking for the 10th best, and I'll let you know. Stay tuned. I'll let you know what I come up with here. But the fact that after a big day yesterday and this intensifying China news today, and it's not really going down that much, I think is pretty encouraging.
Yeah, it's very
and that's a narrative. When we talk about narrative, right there, that's a narrative. You lay that out, and that's the opposite of we need these rare earth minerals, and that's why we're going to raise the price of cabinetry by 130%. That's they're both sort of battlegrounds. America's weapon is just our insatiable demand for crap. And so what we're going to do is, that makes it a weapon. That makes it the cudgel in the fight with China. It is not necessarily fair, but neither is life. No one was promised anything on this earth. And right now, if you make cabinets or upholstered furniture, or if you're trying to sell them, there's a 99% chance you import most of it. I think there's like one little factory in North Carolina or something. Otherwise, you're just going to pay through the nose. And it's kind of random. It's not specific to one country. It's focused on China, but we've moved a lot of production out of China, but into Vietnam, say. That's one of the things that killed the shoe rally is we've had companies building in Vietnam for decades, said, this is where you want to go. We moved all this stuff from China to Vietnam. Then they smashed Vietnam with tariffs. You can't play fair. Gap's another one where they've got the distribution. I mean, the most PC supply chain you can possibly imagine. We're just going to make something in every little country in the whole wide world. Kumbaya. We're going to expand
Disneyland style
little businesses. Yeah, and it doesn't even matter. It's like, screw you. The whole world is, they're all ripping us off, and so they've all got tariffs. There's just kind of no escape from that.
Yeah. All right, Bakes. Let's wrap this up.
I got two more. Then we'll get us out of here. Silver. I've been talking about this for months, and I don't have the chart right now, but I'll get one. We closed spot above 50. So the 1980 and the 2007 highs resistance is now done. I think I'd like to see some follow through. We hit a high of 52.50. I think we're down to 50 and change right now, but the miners are telling me that you're going to have continued movement to the upside when you take out and have some short squeezes when you get above $50. Whenever I see a 45-year resistance line being taken out, I pay attention. And just the gold silver ratio alone getting back to normal implies higher prices. So yes, this is an extended chart. I'm back here in June with the buy here. It's up 60% so far, and I mean so far. I have my wonderful colleagues here. They tend to sell too soon, in my opinion, and I am going to let this run. And when it doubles, I'll take half off the table and play with the house money. But I don't find many people talking about silver on the myriad of podcasts that I listen to. And I think this is, the S&P 500 has Newmont Mining as the only mining stock in there, and that's almost entirely gold. And mining and materials, I think, is 1.5%, maybe 2% in the S&P. So if you want to outperform the S&P, you ought to own some silver.
Better
I hope.
Yep.
All right. Last
so
one.
Bakes, what are you looking for? What are you going to start looking at to see the tide is turning here? I mean, it's taken out the highs that are very old. That's obviously very constructive, but I mean, these things aren't all going to the moon.
They're not. But again, when I see a 45-year resistance line taken out, I'll be concerned if it gets below, if it just has an island reversal, if you will, closes below 50 and acts like garbage. And if I see this up volume in the small cap miners, and it's kind of interesting. I don't own the IWM, but I own small cap uranium, small cap silver, small cap copper, etc. So
so kind of like a blow off top looking.
Yeah, who are the Hunt brothers this time around? I'm looking for the Hunt brothers.
Right.
And we'll see who they are, or if there is one.
All
but we're just getting started. When you have a breakout 2 days ago above 50, that's the beginning something, not the end of something, in my opinion. If I see that below 50 on big volume and it looks sluggish, then I got a problem. And I'll
right.
take
That's what I was looking for. That's what I was looking for.
and this is uranium. This is a buy August 27th around here, up 36% or so. My eyes are going, and I'm too vain to put my glasses on. Um, and these are the junior uranium miners, and this is with a spot price at 79, off of the 106 high from a couple of years ago, and the all-time high of 135. So uranium, if it just eclipses 106, I want to see what these stocks do. But we're already taking out all-time highs of this relatively young, to be fair, URNJ. This is the junior miners from Sprott. Okay. And the spot price of uranium hasn't really done much. What's going to happen when it does? I think if these don't all double, I'll be angry. Frankly, I'll be angry. So I'm up 36.
Well, we're about to see how well these junior miners actually operate, and with uranium prices where they are, can they grow into these valuations or not? And then once the uranium price does start to move, we'll see how efficient the operation is, right?
Yeah, no, absolutely. But a spot price going up, you have to have big production shortfalls to really hurt the bottom line. Cameco has been had production problems for a long time. This is CCJ. Yep. And they and Kazatomprom is part of the bullish story, is that they've had so many production problems making uranium. Well, their production's down, but the spot price is up enough, so the revenue goes up and it falls down to the bottom line. So I'm a bull, and stay tuned. And this is sort of like 106 is my 50 for silver. When I see 106 uranium, then we're going to, I think, go like a knife through butter to 135. And if you take out 135, then it's going to be glorious.
All right. So we're going to let the winners ride here. Just let it.
Damn right.
Roll.
Damn right.
All right.
Markman Tuner.
All right, guys, I gotta run. Thanks for
all right, man.
Thanks for the good insights. We'll see everybody tomorrow. Follow us on wallstreetbeats.com and on passes.com/wallstreetbeats, and we will see you tomorrow.
Keep smiling. Thanks,
guys.
Jen, thank you as always. I got to run too. My dad called Mitch.